Southwest Airlines, guys. This is a stock that I currently own. Mo does not. But remember, this is not investment advice. We're not in this channel to tell you what stocks to buy. Do not buy a stock just because I or even Warren Buffett owns it. You should learn a process. We're trying to teach a process on this channel. Learn a process and apply that to the things you understand. But I'm going to go through Southwest and explain to you why I own it. And then we're going to go through the 8 pillars, our famous 8 pillars. We're going to go through analyst estimates. We're going to go through it's a stock analyzer tool, which will tell us what price to pay for the company based on our assumptions about the future. There's something in this video for beginners all the way to advanced investors. It's a way of thinking. We're here to provide that. That's the big key for this entire channel, is to talk about a process and a way of thinking. But trust me when I say, once you learn the process, life and investing will become easier. It's still a hard area, but it'll become easier as time goes on. So let's go check out Southwest Airlines. Year to date, up 8.4%. The last 5 years, it's down 30%. This is a company that got slugged hard during COVID. Let's go look at the 10-year price. What was the all-time high? $67 on December 21st, 2017. 52-week low? Oh, just last month, $28.40. Wow, in the last month, it's up that much? 19% in the last month. I didn't even catch that. Wow, interesting. Okay, so Southwest is probably the most well-managed airline in history. Before COVID, it had never had a losing year.
It took a global pandemic for them to lose money.
It took a global pandemic for them to lose money.
And people to say, you cannot fly anymore. It's incredible.
Look at their revenue. Look at the income statement. Let's look at their revenue by year. Look at this. Just growing. And then plummet. Understandable. Then, guys, they're back to record revenue. Now, why am I interested in this company? Record revenue. Look at this profit. So back when they were doing $2 to $3.5 billion in profit on lower revenue, they haven't gotten there yet.
They did not have a down year for the past 20 years until 2020. It was continuously growing revenue in some fashion.
So guys, they do a great job of hedging their fuel costs. They're very big on that. Let's look at their overall metrics here. 2.7% profit margin last year, and in the last 5 years, it was 2.8%. Okay, let's go before COVID. Let's pick 2019. They did $22.17 billion in revenue and $2.39 billion in profit. That's over 10%. Let's go to the previous year, $21.2 billion in revenue with 3.48. That's 15% profit. Guys, their profit margin before COVID was always 10% or more. It's 2.8 right now. This is part of my play. It's similar to Disney.
Yeah.
Disney had a much higher profit margin before COVID. So the question is, Southwest had their issues at the end of last year with the shutdowns, and I think there's still a lot of
computer issues.
Credits and things like that are being given out there to people.
They were giving away.
They were giving a lot of stuff away.
That's right.
So I think this is a play. I'm not looking at this PE of 32 and this 5-year PE and caring about it at all. All I care about here in this company is what does the future hold. Let's actually take a look. Wow, they have a dividend of 1%. Pays out $214 million. They can afford it. Let's look at their 8 pillars. Look at this, Mo. Look at how crappy this is.
Yeah.
Guess what, guys? I don't care. This is the kind of company where I'm looking at a disconnect between what they have done in the past very consistently for a long time and why would that be different today. What first attracted me to Southwest was, remember the 737 MAX issues? Mm-hmm. They made $2.4 billion that year with $870 million in costs after those costs associated with the 737 MAX issues.
Yeah.
I think there's a company that can do 15% margin at some point in the future.
Yeah, they're very well managed.
I think so too. All right.
They navigated their way through COVID very well.
Yep.
I mean, for as bad as it was.
Now, I hate airlines. The only tough part about Southwest is
you don't like airlines.
We just don't like the airline industry.
There's a lot of union stuff. There's a lot of
bankruptcies.
Moving parts. Yeah.
It's like, I think Southwest is one of the few airlines that hasn't gone bankrupt like ever.
Yeah.
It's just terrible. Yeah. So, remember guys, in the 8 pillars, if you have our software, you can customize your 8 pillars up to 12 of them and 4 quadrillion different versions of it, variations of it. Let's see, what else is there? Oh yeah, the free cash flow last year was pretty bad, minus $1 billion. Probably because of that huge issue. And let's look at that. Let's look at the cash flow statement. Let's look at it quarterly.
So they returned free cash flow overall in 2022, $1.82 billion.
Yeah.
It's been a rough go. It's getting better.
It is getting better, less losses
right.
along the way. But look at their capital expenditures. They've really increased a lot. Mo, look at this. 90 million, 95, 95, 138. This is by quarter, 183.
Oh, boy.
Oh, that might have been COVID time, though. Let's see what it was before COVID. Let's check out before COVID. Yeah, 500 million, 160 million, 230. Mm-hmm. So their capital expenditures have been very, very large. That means the money they're investing in their fixed assets. So understanding why that money is $1 billion will be very important. Probably the computer system was a big chunk of it.
Yeah, I mean, I think that's one of the biggest problems I see with them. But again, short-term problem.
All right, Mo, what are some bull and bear cases for Southwest? Do you have any off the top of your head?
Top of my head, bull cases. I mean, planes right now, people are flying at insane rates right now.
Yeah, look at their revenue.
I don't see that coming down anytime soon. I think it's only going to get better and better. So is Southwest replacing planes? Are they doing upgrades like all of these other companies?
So good question. Southwest, part of their business model is they stick to one plane line.
One plane, right?
Yes. I think the 737 MAX and these other highly efficient, fuel-efficient planes is a big part of replacement over time.
Okay, that's what I thought I read that before.
And that can be part of the capital expenditures.
Right. Now, bull cases, I think it's really the computer system.
As a plus.
That's it. They need to, once they revamp that, I think it's going to be smooth sailing.
Yeah, I don't even get the whole computer thing going down
So
thing.
I can't really speak to this completely, but I find it hard to believe that Southwest's computer systems are different than United, Delta.
I'm sure it is, but the good news is, if it is, they can just upgrade it.
Yeah.
Hit the button.
I hear it's like from the 70s or something, and I'm like, really? It hasn't been upgraded since the 70s? But they've had two of the biggest hiccups as far as travel goes. One during Christmas and one some other time. I can't remember. But.
Yeah. So, okay. So let's look at analyst estimates here. Analysts expect Southwest to make $276 per share this year, which would take it at about a PE of, what is that, 12 right now, 13, maybe 14, and going to 572 in the next 4 years. Look at the massive jumps in EPS here.
It's huge.
Almost 100% in the last year, 42%, 22, 17.5. Why? As they increase that profit margin. Revenue, and funny part is, look at the revenue.
Oh, wow. It's basically, basically flat.
It's they don't have much growth.
Very little.
All right.
Okay.
So now, best thing to do is stock analyzer tool. Guys, this is the tool we're going to use, just like the 1.3 million times it was used last year by our users. This is the most popular part of our website. It allows us to make our assumptions about the future low, middle, and high. Because especially with Southwest, okay, they have really low profit margin. Let's go higher and let's go back to normal levels on the high side. Fine by me. This will be a great way to see what's the company really going to be worth. All of the software, including all of these tools above, and our Everything Money community, thousands of investors talking here where you can have a conversation about every individual investment idea you have and mindset to get in there. If markets do what we think they're going to do, the people in here cheer that on. They love the red days. So check out everythingmoney.com, $7 for 7 days. That's $1 per day. Sign up now. Now look at this, Mo. 10-year return on invested capital is 9.7 with this huge drop here because of just abysmal earnings.
Exactly. That doesn't. I actually like seeing the decrease doesn't worry me at all. And me seeing 9.7, I go, yeah, that's going to be higher.
Way higher. I mean, before this, it was probably 12 to 15%, I would guess.
Yep.
The great thing about Southwest is they're very efficient. They have the same plane going, listen, we want all of our mechanics experts in every single one of our planes. We're going to save money by buying all the inventory of parts and things like that. That way we're down for less time. It's an extremely well-run business.
Yep.
The goal is, if you own Southwest someday in the future, my thing about Southwest will be, are they trying to expand faster than they should just to keep investors happy? That's the biggest concern whenever a company has a great model and they need to grow more and more in the future.
Yeah.
So Mo, let's do a 10-year analysis. Give me some revenue growth numbers.
What do you think about 2, 4, and 6?
Love it.
Okay.
What about profit margin?
Now for profit margin, I kind of want to go up to 15% on that high side.
On the high side?
Yeah.
I don't think we should go as high as 15 because that was like 1 year.
Okay.
But
what do you think is the highest? Let's start with the highest.
I think 12.
Okay.
And a half.
9. Well, you can do 9.5 and 6.5.
I love it.
Okay.
So guys, we're still going higher here, but look, the last 10 years was 6.5 with COVID in there. So I think to myself, let's say that's the new norm. But it'll probably be closer to this, maybe a little bit higher because they were over 10% before. But if they really crush it and they get that 737, remember, that year of 2.4 billion included 870 million or so, or 840 of loss from the 737 MAX issue.
Yep.
And when you have 20 billion in revenue, that's 4%.
Yep.
That takes your 10% to 14.
Yep.
All right, free cash flow margin?
Same thing.
I agree.
Yep.
And the reason being, guys, I look at this going, that's what I'm focused on here. It's very close over the last 10 years, so I'm just going to mimic what I did here.
Okay.
Now, PE.
15, 17, and 19. Is that okay?
I'm fine with that.
I think it's reasonable on all fronts. Guys,
remember when it comes to PE, that's a very common question we get. What's the right PE? We always start at 15, and we go higher for revenue growth and for ROIC.
Right.
That's how I put this here. If the ROIC you think is going to be lower, they're not a good use of capital, and the revenue growth isn't very good, you go lower. But I think Southwest really controls the market of the mid-major airlines. Not the biggest Delta, American Airlines, United, all those, but they do a great job in the regional airlines.
Have you flown them before?
Southwest? Yeah. The only reason I don't is because Lisa really hates the whole waiting in line. She goes, I feel like a pig at the trough. I have to sit there and wait, and I have to select my seat. I'm like, I know, relax there, Peanut. Now, desired annual return, Mo.
10, 12, and 14.
So I think that that's correct, and here's why. This is so beat up, guys.
Yeah.
If this is the new norm, I'm fine making 10%.
And I don't think you need to make it higher to add more margin of safety, just because I think their problems are over. The problem was COVID.
Yes.
You know, it's not like...
Well, and the computer problem.
And the computer
But
problem.
they're going to fix that.
But that's not a pandemic, you know?
I
That's
agree.
just a hiccup.
Yeah. Obviously, guys, the more margin of safety you want, the higher return has to be. Because the more, if you pay $100 for this phone, you're going to make way more return than if you pay $900 for it. That's the key here. So the higher the return required, the lower the price. That's the big thing there. How do I close that? Great. So I'm hitting the analyze button. Now, guys, when I hit the analyze button, a bunch of numbers are going to pop up. Please listen to this all the way through, because I want you to understand these numbers. 3 numbers, low, middle, and high based on earnings. 3 numbers, low, middle, and high based on free cash flow. And then 3 more numbers. If you paid today's price of $35.28, what will your return be based on the low, middle, and high occurring? Okay, so let's go and look at this. Low price of 36, high price of 81, middle price of 57. If you paid today's price and the low assumptions occur, you're going to make 10.4. Middle assumptions occur 19.7. High assumptions occur 28%. Again, don't buy it just because of this. Do your own research. We're trying to teach a process, but this makes me feel good about Southwest. Guys, thank you very much for your time. Everythingmoney.com, $7 for 7 days. You get all the software, no brainer. Thank you.